Hello, traders. Welcome back to another market analysis. This is Leo from Bid the Market, and today we're gonna continue our breakdown on the stock market and navigating how the year is gonna be and the forecasts. All right. So what I try to give is the big picture, and then when swing trading or if you trade, for example, indices, it's all correlated. So if you understand where the E-mini or the SPY SP500 wants to go, you will use that analysis to feed into the risk on assets. So what I mean with risk on, when the stock market goes on up, there are other assets who follow. For example, there is the VEX that goes down. There is the dollar that actually goes down. Sometimes it's not all the time, but when the market is synchronized, everything goes in correlation or the opposite correlation. And also, if you look at the other indices, they all go the same. Like Nasdaq, they have the same cycle. Like the Nasdaq bottomed in October, and the Dow and the SPY also bottomed in October. And you can use that to feed to other assets. It's not limited to the stock market. That's why we need to really forecast the stock market in order to have an edge into other assets. And also you can use that for forex as well. For example, if you have a risk on currencies going up, for example, NZD or the OD, they will show some strength when the stock market is going up because they are considered to be risk on currencies and vice versa. All right, like for example, if you look at the euro, I think we are coming to a nice bottoming area. So, but we are coming into a pullback, so we might have some on the stock markets. I will show you my forecast and then see how it's gonna be. Okay. So what we have here, okay, this is an expanded triangle. We bottomed here, an impulse, and then the market made a lower high, but I think we are developing into a trader range. A trader range, okay. I think at some point we need to have another leg that is actually going to come break the low that has been present in October the last October 2022. Okay, so that's my opinion on the price action. However, we use also time window. We use a lot of tools in order to time the market. But I don't think we're gonna come in this year. But I think probably in 2026, that's where the, as they say, the real shit is gonna start. I think. But anyways, all the models converge into 2026 to be the worst year ever. Okay. So I used many models to forecast how the market, in order, you need to also to understand something. The stock market has an average. Probably you heard this. You heard that the stock market probably has 10%, maybe 10, 8% average annually. So every year. So in order for that to happen, we need to come back to the average price. And I think the average price now for this leg is down here. We did not touch it. No, we actually touched it perfectly. Yeah, but on this spy we didn't touch it. But in the Imini, so the real spy, the antics, we didn't touch it. But on the Imini we touched it. So the Imini it trades 24-hour and so on. Okay, so also in the future or Globax session, it trades on. But the SPY index, it doesn't do that. Okay, few things as I said in the last analysis I shared. I said we're gonna see another push up, and I expected that this wedge or channel regression to fail. I wasn't convinced that we reached the top yet. So this is this channel, these parallel lines, this line is parallel to this one, and it's a channel. And now I think the ball's trying to break, but I think we're gonna have a failing breakout and then go ranging down, sideways down, then go up in August. Okay, I hope that's clear. So why I think that it's because I use I use a model that takes every year's data and I compare it to every year that has been treated the same in the same way on average. Okay, so the printed forecast on the average has shown me that we're gonna have this kind of sharpie price action, and in the last of the year we're gonna end up being bullish. So this is the end. We're gonna have another really strong rally, probably something like this. Okay, so that's where you want to be in the market in the bull scenario. But right now, I think we are coming to a pullback very soon. We have a target around the standard deviation from this low to this high. If you double that distance, it's gonna come bring you here. So we are coming there. I, th- I mean, I had that as a target, and I was trying to buy indices all the time. They come down, and I day trade. So when you have a bias, you know that a candle or the bar probably there is high percent that is going to be green. You're going to look for buy setups. Okay. So on the daily, I think we're coming to a top very soon, and I will try to get like I want to see first some weakness to break at least this low, and then probably I'm gonna get onto the lower high or the double top or something. Okay, so that's the kind of patterns you play patterns when you have a like a zone, a very strong. So I think we're coming to a strong resistance, and we're gonna have a pullback very soon. So that's my forecast for the next. But right now, so we're still probably gonna push a little bit higher. I'm not gonna call the top. I'm not gonna try to short the top because many have tried and failed. I don't want to be that guy. Okay. So what I do, if I'm really calling the top, I trade very small. I use large stop loss, and then I add to my position once my bias is confirmed. Okay, but I start with a very small position. Something doesn't hurt your account. Probably you're gonna risk 0.5 or 1% maximum if you are trying to get a top. But I advise to not do so. It's not an easy business. Okay, so my forecasts are coming in this way. Just mark the times because the time is very important. So there is probably is going to be a low here around May 24 or May, late May. So it's a window. We need to give it some room to really have the markets have their breath. I don't know how the magnitude we're gonna come lower. We really don't know because as much we push higher, the levels of support are going to increase. You're going to get up, and now if you probably if you have a tap around this zone, so 50% is going to bring you around this high. So we're going to probably come and close that gap. So that's if a healthy pullback, which is 50%. And me, I know myself, I like to buy below the 50% because up there, here, you are buying premium, and down here, you are buying a discount. So that's how I think about legs from this leg to this high. That's what I say. Another way to use this, you can use this. So if the market is going to continue very strong, probably we're going to stop around these levels and never break them. So it's going to market is going to and go just sideways until it bottoms and go up. Okay. And I hope you found this useful. And let's see what we're gonna get in the next week. I will try to to not trade in the first days because we still have probably 6 days until the month the bar is gonna be closing. I will try to see if the market is gonna trade above that bar, and then look to short it on that deviation above that bar. Okay. Let me let me let me show you what I mean. So probably we're gonna close bullish. I don't know. We still have 6 days or 5 trading days. See you next week. So the bar when it's gonna close, I want it to trade above that high of that bar. So I don't know where it's gonna close it yet, but I want it to trade above it. I will look to short that or wait for more confirmation. So that depends where I'm sitting. If I see For example, if I see the what is my if I see a good support, the VEX, man, I need to show you something scary, and it's really scary. If the VEX, okay, because right now we're around we around the zone where I expect a low to be printed, and then another moves like up to be coming to the market. So I expect a low on the VEX to be printed very soon. And I think if the low is in, that's a problem because we see right now some kind of divergence. What I mean by divergence. Okay. And if you notice here, the bears who shorted here, they are getting out here. So that's a sign of be careful, okay? If the fix moves strongly, the stock market goes down. So that's all you need to know. But right now, we came back. Also, the bulls here they got out. If you see this green bar, like you can draw a zone there. So they got out at break even. So it's very still bearish until we close above that bar and we start pushing higher. Okay. So we right now we need to trade this very carefully. I think if we made a new law and probably is gonna be timed with this strong. It's not really there. This strong level for me. If we trade below there, that would be nice for me to call a bottom on the VEX and also on a top on the SPY. Okay, so if the VEX is gonna be timed on support, I think I will check that trade because I use the VEX, to time the market. Yeah, when the VIX was coming down here, I thought we are gonna have this, but the way it happened is not the way I like it. But anyways, it's the stock markets. It's fucking markets. You cannot really know how they're gonna behave. Anyways, let me go back. So the VIX, there is this strong level here I'm watching. So this gap close. You can draw a zone there. It's not just so. It's all a zone there. Because maybe we're gonna close they're gonna close that gap. So you can think about this as a supply, or the way I think about it is the last rapid beers smart money. They call this that I recently started navigating as well. Not smart money, so just be precise, but they call the concept smart money. They pretend they are trading as the banks. Okay, and what the fuck knows how the banks trade. But anyways, if they trade like the banks, that's perfect. Okay, banks are making money, you're gonna make money. But anyways, I have my strategy. That's what I follow, and you need to trust your strategy. So here we have this level. So from this zone here, some bears got trapped there, and the market broke to the upside. We broke the upside because we closed above that. However, we still, if we look at this, we're still in the context of a trader range, and we might come and test the low. So right now we are not. We kind of broke. We broke above that range, but we came back very quick. It's short-lived. But anyways, probably some moving average there. Let me check because that happens many times on probably on the weekly. Yeah. So the moving average is the actually acts as resistance when the market is in a downtrend. So we also do some things to watch. Okay, so my idea is this: if the VIX comes down here and tries to bounce, I see good bars. I will try to short this buy. Okay, so that's literally what I'm gonna watch. You need to understand the markets; they are all correlated in a way or another. Okay, it's me, and I'm gonna end the video here. I hope this is useful for you, and I'm gonna leave this here so you can check it the forecast. I mean, it's gonna be a video on YouTube as well, so it's gonna be there as a footprint for you. And take care and see you with another market breakdown. Let me leave it just like this.